Switching gears, let's get to your money. Where's this market going to open this morning? Ever so slightly lower, but that follows 4 days of very nice gains. Joining us now, market watcher David Nicholas. Now, it seems like we're really all looking towards the profit reports that come out next week. I've seen a downgrade on these expectations from an expectation of 16% profit gains to about 12%. Is this going to be a problem?
Stuart, thanks for having me. It's an honor to be on your show. You know what's funny about that? The most positive catalyst for me is that expectations are lower. Because when expectations are lower, the surprises in companies' earnings are really what can move markets. So I'd actually think we're in a much better position today with companies lowering guidance because I don't think the earnings story has changed much. Stuart, you've talked so many times about the return to prosperity in this U.S. economy. The economy's doing great. I think that's going to show up in earnings. So I think it's the earnings surprises as earnings start to report that I think will push this market forward. It's one of the main catalysts I see over the next couple of weeks.
You think we can keep going up because we've had 4 days of nice gains? We keep on going up?
Okay, these levels are very important. Yesterday, the 2580 to 2600 in the S&P is very important. Stuart, if we can hold these levels, I think we'll retrace to the highs that we saw last October. If we can't hold these levels today, I wouldn't be surprised if we trace down to the Christmas Eve lows, but fundamentally and technically speaking, the markets are poised to do well. Okay. But again, there's a few catalysts that are leading to that. If we get a trade deal, which I think is imminent, I think you could see the markets push another 10% higher.
Whoa.
So we're getting closer to that March 1st deadline.
10%, well, we like the sound of that. All right, stay there for a second, David. I want to deal with Apple for a moment. They are planning another cheaper version of the iPhone. Tell me more about this.
So the struggling XR, remember the LCD, liquid crystal display, cheaper iPhone that was part of the release in September, not doing well for Apple. In fact, some see it as the Achilles heel. Well, guess what? In the new revamped release of iPhones, they're keeping an LCD model regardless. Now, they say plans could change. This is for 2020, but cheaper iPhones has not worked for Apple. XR is struggling. The 5C in 2013 struggled as well. But I would say that Apple's in a difficult position because some say selling $1,000 handsets in emerging economies with low incomes has also been difficult for Apple in this recent year. But then, they're a premium brand as well. So how do you manage the two?
Well, they go with a low-price alternative for those emerging market customers, I guess, who might be interested in it.
But that has not worked, once again.
Yeah, true.
And LED provides better contrast.
Okay, good enough. David, come back in again, please. Do you own Apple by any chance? Have you got a piece of that?
I don't. We actually shorted Apple a few months ago, but I actually don't think Apple's a buy right now. The biggest reason, they're just not innovating. The most exciting thing that Apple has to give us about their next iPhone is that there might be 3 cameras. Well, I think after the second camera on a phone, you start to have diminishing returns for buyers. But, there's a loyal customer base for Apple. But I just think that the phone market is a mature market. Apple's got to come up with something to innovate in order to see the stock retrace back to its high. So for right now, Apple is not a buy for me.
David Nicholas, thank you very much for joining us this Friday morning. Always appreciated.